introductions are done, I take it. We're all cozy and friendly. So thank you, Pete. Thank you in more ways than one, because I've got a lot of work today. I hope by the end of today you're not sick of my voice. So I'm going to try and do as little talking as possible and just really facilitate the flow of all the panelists. So we're starting off with a really key theme, and I think the perfect segue provided by Nick. So thank you very much for that, Nick. So what I'd like to do just before we kick off on the theme, which is really exploring crypto investment models and this is provided by Pete, by the way, for 2019. So I think that kind of timestamp is really significant because so much has changed in such a short period of time. So looking a year ahead, because I think that's really only feasible at this stage. Before we kick off, could I ask, starting with John, just a 2-sentence intro for the audience, please.
Yes, my name is John Matonis. I'm one of the co-founders of the Bitcoin Foundation in 2012, and I'm also co-founder of the Globotex digital currency exchange. We are a licensed exchange in Lithuania, and that's fully passportable through the EU.
Good morning, everyone. My name is Jay Gomez. I'm a lawyer at Triad & Triad's Gibraltar office. I work within the financial services team. I'm also the deputy chairman of the Gibraltar Funds and Investments Association.
Good morning. My name is James Lassery. I'm head of funds at the Sons and chairman of the Gibraltar Funds and Investments Association.
Hi, my name is David Lukács. I'm the chair and founder of Pegasus FinTech. We're also a GBX sponsor firm.
Well, I just spoke so you know me, but I'm Nick. I'm the head of GSX. I'm married with 3 daughters. I used to do triathlons and now I'm just fat.
All right, I'm going to start with you, James, if you don't mind. And I think, again, coming back to Nick's foundational piece here in terms of, well, everything that I think GBX is attempting to achieve. You touched on essentially a taxonomy, which I think no matter how often you come to the subject matter with an audience becomes an important, an important foundational topic. So James, just in the evolution of regulatory and legal constructs globally, where are these definitions settling in terms of crypto and tokenized assets? I mean, are jurisdictions and regulators agreeing in terms of how to define these new asset classes?
Absolutely not. So I think you have to start. You have to go back in history a little bit to understand this question. So 500 years ago, you didn't have securities laws, but you did have principles of fraud and misrepresentation. And this is really the basis of all security law. Then as technology and communication got better and the company structure was formed, you had company law, then securities law. And the thing is that securities law has become quite heavy with time. And the more wide you're offering, the more it needs to be regulated, the more you need to protect investors. But I think we've gone a little bit far with the pendulum, and so we've had a situation where some very, very clever lawyers came up with this idea that you could have utility tokens. And by doing that, you're able to raise money from the public and not comply with securities law. Well, that's what they thought. Turns out it was a good idea. Does it work? Some of the time it genuinely works, but a lot of the time it doesn't, simply because people are buying these tokens not because they want to prepay for the use of something, or they want to be a member of some club. They're buying these tokens because tomorrow they think the token's going to be worth more in some way or other. Which is why we are seeing that. So one of the great things is that has been a huge, and in my view, positive disruption of the securities law industry. I love this industry because the principles that I've been working with as a lawyer with for the past 20 years, we're now able to apply to a completely new set of facts. So I think we've gone a little bit too far with securities law, and this disruption has been positive. Having said that, on a very practical level, we're going to see a lot more security tokens, which are tokens, but they also comply with securities laws. And I hope that legislators take note of this and perhaps try, what we've done now is we've said that securities tokens are regulated somehow as tokens, but also as securities. Perhaps in some cases we need to make it simpler for people to create these tokens and put them out to market, which is something very much, Nick, what you're facilitating. So absolutely not. I mean, in the United States alone, the SEC says they're securities. The CFTC says that they're commodities. The IRS says that they're properties. And FINRA says that they're money. So everyone has a different opinion.
So, right, so let's stay with the sticky topic of taxonomy, but more in terms of the perspective of central authorities, John, and if I could turn to you, because that's really, by my understanding, where you spend most of your time, working with central banks, regulators, evangelizing, educating, informing. Friction points, movements, shifts, changing perceptions. What is really a challenge for you, and where are you seeing the light when it comes to these central authorities, if any?
Yeah, I think we're starting to see the changes now, because I take a little bit of issue with what you said with attorneys creating utility tokens. I think attorneys were followers on that. They weren't the leaders on that, and the law is still in some ways still keeping up with that. So you basically have three ways that companies can raise funds. We live in a time now where there are three ways. You could either sell equity, you could sell debt, or now you can sell a utility/protocol token. The security tokens that we call STOs are really just some kind of variation on the first two categories. And I think that they're most likely going to be dominated by people who are, or the institutions that are already playing in that space, the legacy security institutions, because they have such a head start on the regulatory side. That's not to say that other companies and startups won't be able to innovate in that space and compete, but I think the real room for innovation is on the ICO utility protocol token side, because that's the new area. That's the third area that regulators don't know how to define, they don't know how to deal with it, and it's still a different jurisdiction by jurisdiction, which is one of the ways that Gibraltar has such an amazing advantage and opportunity. So I look at the landscape that way. On the part about dealing with central banks, investors essentially have a variety of ways to pay for these ICO tokens, or even the forthcoming STO tokens. And you can use, there's really about five major monetary tokens that are used to facilitate the purchases of the others. It's Ethereum, which is obvious because of the ERC20 protocol for the sub-token issuance. But then you also have Bitcoin and Bitcoin Cash, you have Litecoin. These don't represent any ties to a company or an entity. They're general purpose cryptographic monetary tokens that we're using to get into the other system. So that's where most of the liquidity is, and that's what the exchanges are focusing on. And the regulators are also focusing on those efforts where the crypto tokens intersect with the fiat. So when you talk to exchange regulators, crypto exchange regulators specifically, they're not so much regulating the transfer or what you can do with crypto tokens. They're regulating the purchasing and selling of crypto tokens into and out of their own national currency, because that's the only point of friction that they can legitimately control, is that point of friction. So we're going to see increasing regulation on that. We already are. My accounts at token exchanges are scrutinized more than any banking relationship that I have. And then one final comment is because of the shakeout we've seen this year, I'm not confident that we're going to see a full return to the ICO market the way it used to be. I'm confident that we'll see a return to it, but I think it's going to be a much higher standard. There's going to be a much higher bar for these protocol utility tokens to actually demonstrate some usage prior to the ICO. And perhaps one of the litmus tests may even be that the token should have a life of its own that extends beyond the life of the issuing entity. So expect that landscape to change, and it will return, but it'll be in a different form.
Brilliant. So you've actually provided a springboard for two questions that I want to settle with David and Nick. But Nick, just based on what John's put forward there, I mean, so much of what John has laid out has really propelled, I guess, the ethos, and the benefits that GBX does offer to its issuers and providing liquidity to the market. So, do you see GPX and its structure today being essentially one of the kind of go-to models for traditional exchanges pairing off with tokenized exchanges, let's call it tokenized exchanges in the future? What's the world, what attention are you getting because of the model you've adopted?
So I think, first of all, just to say to John, I think what he said, I concur with enormously. I think he talks a huge amount of sense, and John's a leader in this field, so I respect everything he said. So that's the first thing to say. I think what he said as the groundwork, I think, is absolutely on point. I think when we started talking about GBX a year ago, the response we got, because the market was flying, was, why should we come to you? It's just too much of a pain. It's too difficult. We've got to put too much disclosure in our white paper and go through this intense due diligence process. I'll just go somewhere else. In fact, I won't go anywhere. We'll just do the public sale ourselves. But as I said in my previous talk, that comes with a lot of risk and a lot of heavy lifting to do as an issuer. I think since then what's happened is a lot of the bad actors, a lot of the issuers coming to market without anything, just an idea. I think a lot of that started now falling away. So I think if anything, there's been as John said, there's been a raising standards, a higher barrier to entry. And we always try to lay out our stall as really a long game. And I think, as an innovative source of funding, has it disappeared? Absolutely not. But I think in order to get access to that funding, you have to have a really good story. You have to make sure that you can continue to deliver information to the people who have backed you to say what we put in our white paper. Either we are doing it, or we're not doing it for the following reasons, and we're failing for the right reasons because of the nature of the business. So I think just in terms of that, it's going to continue as an innovative form of let's just call it fundraising, because I think it's been a groundbreaking transformation. From our own personal perspective as a private company, we've done an A, B, C, and a C round over the last 5-6 years. Raising our money for our token was so much faster. I wouldn't say easy, but it was just an eye-opener in terms of getting access to funding. That's the first thing. I think secondly, look, the way we see things, I think John's right. Look, all we're talking about with regards to tokenization of securities, it's just a security that clears differently. So let's just keep it as basic as possible. But what you've historically seen is, if you think about it in another way, post-Lehman's, banks were closed, VCs were asking for more. Bitcoin came along as a peer-to-peer payment system to get around the banking system. Ethereum came along, innovative source of funding, started with donations, and then that grew and grew and grew and grew and grew. We see it in the following way, in simple terms. You're a startup, there are different ways you can get access to funding, and I think it's a really strong story. Utility token is a great way to start. You're then going to go into probably a debt raise, and you're probably then going to go into an IPO 5-7 years out. And I think the VC model is still relevant, but that's the way we see things evolving. So I think the digitalization is just an efficiency drive in terms of making access to capital much, much easier and lower the cost of maintaining it. So that's when we talk about this pivot point in terms of technology shifts. We had the internet 20-something years ago. This is, for us, is the next one in terms of the way companies raise capital.
So, thank you. So, David, I mean, I guess you are walking 2018 has probably been quite a ride for you. Do you echo much of what Nick has said in terms of your experience? As an innovator, as someone who's in the throes of looking at fundraising, what is this communal period presented as both a challenge and an opportunity to you?
Well, I think it's more so for our firms. I'll start by saying something I learned a long time ago. For most companies, there is no fun in fundamentals, right? So at the end of the day, echoing what Nick said, it is a hard process. It is an arduous process, and it is a complex process. And for most companies, the best way to start is through an ICO process. And that ICO process allows you to raise capital in a very innovative way and to move forward maybe quicker than going a reverse merger process or any other process. But being from North America, where there are a lot of regulators both in Canada and the United States, there are ample ways to raise money under the security exemption rules. So what most organizations don't see is that there are proper ways to raise money through an ICO using an exemption either in Canada and or the United States, and those exist. However, those kind of lead into the accredited rule issues. So you have to have accredited investors. Where I think ICOs and STOs differ, not necessarily in their process, but in their disclosures, because the U.S. has not made any registration statements, or as we would call them under the British system, prospectuses. They've not cleared any, so you can't actually go to that. But where I think an STO really makes the difference and will be a next generation opportunity, and you will see some ICOs actually write into their smart contracts redemption features to allow a future STO to maybe take place, is that it opens up the brokerage community. So what we're all missing here is the trillions or hundreds of billions of dollars locked up in the traditional brokerage community, which cannot participate in the ICO community, but effectively can, under an exemption and or an STO process, be there. However, I do think that if a company really wants to focus on raising capital, they have to look at that it isn't an easy walk in the park, and that they'll be looking at having, at the very least, a very good MVP, minimum viable product, and a minimum viable ecosystem. And 2019, I think, will lead us to more regulatory oversight and people following the rules a whole lot more.
So Jay, you have quite a significant role with GFIA, and I'd like to bring up the topic because it's obviously pertinent. Re the role of crypto funds. So either this extended portfolio activity from traditional hedge funds, for example, or new emerging funds. What is the kind of challenge and friction points that you're addressing and trying to look at in trying to stabilize this community? Any incidences or good, bad, the ugly you could share with us, and the important role that these access to capital that these funds predominantly play in this new world?
Sure. So I think the first point to make is that for somebody for the average person who perhaps doesn't have a tech background, understanding digital assets can be extremely complicated. I mean, I've tried to explain it to my mom a couple of times, and she doesn't get it. So as an association, we started to hear via our service providers that there was obviously interest in funds investing in digital assets, or also perhaps tokenizing the units of participation. And there were a number of things that we had to address there. The first thing we were worried about was that perhaps a fund vehicle could be used to invest in digital assets, and that the impact that may have in somebody that perhaps didn't understand the underlying asset class. So I'm pleased to say that after a lot of work, Gibfin yesterday announced the launch of our code of conduct for crypto funds. That addresses many of the matters that we think people should be thinking about when they set up a fund. Valuation, security, etc. Second second to that, what we did as well as an association was that we recommended to our members that they should only really be using a regulated vehicle to invest in digital assets. The vehicle that we felt was most appropriate to that was the Experienced Investor Fund. And in conjunction with that, and also in conjunction with Brexit, what we did was we went back and did a review of our EIF legislation to ensure that it was fit for purpose, and made a couple of subsequent amendments to it, which were also came into effect yesterday. So that is all law now, all in place. We're seeing crypto funds being set up. It's really too early to say whether there are going to be any issues. I think the main benefit that we have in Gibraltar is that we're a small jurisdiction, and that allows us to move quickly. The interaction with the regulator is also key. The regulator, I'm sure you've heard already, is extremely approachable, and that helps when trying to mitigate some of the risks that are associated with this.
If I can add something to that, to bring us back to the topic we were speaking about before. So crypto funds themselves are actually agnostic as to whether it's an ICO or a security token, but they bring all of that into the security sphere because you invest via a regulated fund, and in a way that I don't know, puts it in a more regulated and safe atmosphere.
I think many people in the audience would be really scratching their heads at some point during the day as to not only the definitions, but the options in terms of fundraising, and then this magical term valuation in this world. And I'd like to start with you, John, on that, because we heard a little bit from Wolf today on the crypto economics topic. Valuations seem to be a revolving topic in most conferences, and methodologies for that seem to differ tremendously. So whether it's a utility, security, commodity in terms of its segment, what are the baselines do you believe to consider when either looking at, let's stay with the crypto asset class specifically, in terms of speculative value, the cost of trading that asset, the underlying value of the technology, the cost of running that technology? What are the kind of key considerations investors should be looking at?
Right. This comes up a lot, of course, because we're looking for valuation metrics. I don't think that you can use traditional valuation metrics on things like ICOs, which is perhaps why the white paper has taken on so much importance, because those duties somehow now have fallen to the analysis of the white paper. A lot of it is prospective on what will occur. You have to have an overall view of the addressable market space, the actual utility and protocol function for what's being issued. It requires that. So those don't fall into traditional valuation metric categories. An enormous amount of the potential successful outcome depends on the management team. And the management team is typically mentioned in the white paper, but that management team may not remain. So you have to look at, you have so many things that you have to consider when you're investing in these. I have personally advised and worked on 15 ICOs since last summer, and without a doubt, the top two questions that you get after you complete an ICO are, number one, where the hell are my tokens? And number two is, where do I sell my tokens? And you have to have answers for both of those questions. And they're legitimate questions. They're the same ones that I would probably ask. So that points out, though, that we're seeing incredible participation at the retail level. This has not gone down to that retail level at such small amounts for the mass market across multiple jurisdictions. We've never seen that before. And that's one of the attractive qualities of ICOs, is it lets anybody from anywhere on the planet basically participate in it, unless you're in one of the unfortunate 5 sanctioned countries. So you can participate in ICOs. That's the investor retail democratization argument. But think about it also from the VC side. The people who are investing large amounts of funds, typically on equity side, to invest in startups. VCs, for the fourth quarter of last year, they were the significant investors in these ICOs, and they would strike deals where, you know, they would agree to put a certain amount of equity in exchange for a certain amount of tokens. So they would do combination deals of equity and tokens. And the attractive part of the token economy to them was that they were able to still make their investment in the company and believe in the product, but they would also, in combination with that, have a much earlier exit than they would traditionally under you know, a 5-year, 10-year going public kind of horizon. And that facilitates new capital as well. So it benefits both sides. The only people in the ICO investment world who are uncomfortable are the regulators. It's not the purchasers and it's not the issuers.
That was a dramatic end to that, but great. So I want to stick with the topic of VC and essentially the kind of classic players in early stage investing and their future role. So, you know, it's good to see that we started to see some momentum in the thinking process and the bravery and the risk associated with classic VC participating in ICOs. I don't know, David, is this something you think is set to grow? What is really going to happen to that definition of venture capital?
Well, I agree with John on early days, but I think as we move forward, again, I go back to fundamentals, and we're seeing a shift because early VCs that got in early into the market also got out very early. And if you run a progression table and you look at 6 turns of $1 million, if you get in early and get out early, even though you affect the market, that $1 million can go to $1 billion very quickly. So I think the VCs that got in very early also saw without regulation, they themselves could have been the bad actors and got out and actually drove the market down for a lot of the alternative tokens. I think today, a lot of VCs and a lot of larger players are coming in early, but they want an equity stake in the business. So again, going back to the MVP and the MVE market. And what you're seeing there is they want to see a more traditional approach to looking at an investment. So we're seeing discounted cash flow, 5 years out with the terminal value, all the classic things that you'd see in any investment. And they want to see that there is a great management team that is going to stick around, so they want their tokens restricted in some kind of outflow. We're seeing escrow provisions, and we've talked greatly with the GBX and Gibraltar and the team have taken on a great look at this, and they have started, and they have put in place opportunities to really create a value-based market, and other exchanges are following that. But I think by and large today, most of the money that's coming in is coming in on the early stage. The retail market is shifting a bit. We are seeing a lot of retail investors, but a lot of them, in fairness, are looking wounds for others that got out early. And I think what you're seeing is they're making a much more calculated view of a long-term play in a deal. And that doesn't mean that protocols, which may not be cash flowing, are going to be the future. You're seeing a lot of businesses that are riding on top of blockchain that are using their businesses for blockchain as a service, whether it's AR, whether it's VR, whether it's compliance. You're seeing a lot of service protocols that are using blockchain and the registries to make things happen. And those companies as a service will have revenues. So I think the shift has gone back to a lot more, again, as I said earlier, no fun and fundamentals, but it has gone back to fundamentals to some extent as the market contracts a bit and people have made a lot of profit. Now they want to see where they can get into long-term plays and clean equities.
I think there's a lot of fun in fundamentals. In fact,
depends what side of the equation you're on.
But the reason why I say that is because as the industry becomes more developed, we see a lot of the regulation and practices of securities being applied to tokens, whatever you want to call them.
But I would just say that a lot of that has to do with bad actors. Once you get bad actors in, the regulators are very much forced to then take some position, because I think, if I might, I'm not sure if anyone saw the Howie coin in the United States, right, where the SEC actually put up a fake ICO, right, because they wanted to demonstrate the fact that anyone could be hoodwinked. So, you know, you've got to do research, you've got to look at this, but I think the VCs traditionally are now playing nice and proper where they didn't have to earlier because the regulators are coming into play, and Gibraltar's taken a great position in that.
Want to say something?
Well, no, that's why I think we're seeing a lot of the practices and regulation that apply to securities being applied to tokens.
Yeah, I have to squeeze in something, Finnick. So we've talked about Tunload, and of course, you know, I think John, you stated it. The whole inception and hope for the ICO model was access to essentially early wealth creation for retail investors, right? So that is really the, you know, still in essence a kind of foundational component to why it was so important to go through this process. Nick, in terms of retail investors' understanding of crypto assets, what role do you think asset-backed token models are going to play in this world, given the fact that they're probably, it's an assumption, that certainly retail investors can get their head around the potential opportunity valuation, a straight line to a classic investment structure. Are you seeing a growth in this asset class?
We're seeing certainly a growth in the demand for us to be ready to facilitate that process. I think there's a couple of things to cover. I think if you look at the macro picture, so we're coming from an adoption and a convergence perspective as a company. So we think in terms of adoption, a lot of people talk about, you know, institutions adopting crypto, and why haven't they? A lot of that's got to do with regulation. I think that will change things. But I think as excitingly actually is the crypto community adopting securities without having to go through the banking system, which I think is the whole tokenized securities angle, which I think can be really exciting. I think on the issuer side, we are seeing, but we will see increasingly, and I think it's going to happen very quickly now, what we've seen with the challenges with stablecoins such as Tether. You're going to see the adoption going vertically from startups and fintechs to governments. And I think you'll see governments not only, actually saw an announcement last week from the World Bank, not only incorporating DLT to issue sovereign bonds, etc., but actually talking about national cryptocurrencies. I think that will happen because as soon as we get a stable coin that actually has government involvement, you know, as a securities exchange, we're probably not going to have people buying Apple using Ether. They're probably going to be using a stable coin because obviously the clue's in the word. So I think that's going to be a really important development, and I think that adoption from crypto upwards, I think is really exciting. So you get this convergence in the middle. The second thing to add is, I think John touched on it more, but you know, look, a lot of people have really got hurt this year, and that's going to take time to recover. I think, you know, this whole FOMO thing, I think, look, I'm just a dull trader of 35 years, so I just look at supply and demand and those types of metrics such as, you know, cause and effect and effort versus reward. When you look at that market and going through our own experience, what were people doing? They were issuing tokens. To buy those tokens, people were buying Ether. They were delivering Ether. Issuers were hanging on to the Ether because it was going up. So therefore, Ether was on a one-way track. And of course, it doesn't take long that when that starts to dry up, people have to pay their bills. So they start turning into fiat. So Ether turned around. And actually, there's not a lot you can do to stop that. So the very interesting EY report that came out last week told us what we all knew, which is most ICOs are underwater. Quite a lot haven't even delivered. Some aren't even having their services paid for using tokens. They're using fiat. So a lot of that delivery never happened. So I think there's been a lot of casualty in 18. I kind of think it had to happen because now actually the strong players will come through, and that dislocation is probably, even though it's painful, is actually probably just a market correction that was due. And now I think from here on in on the 5-year play, things will, I think, stabilize.
Yeah. So on that topic, I mean, asset coins are not really true bearer instruments. They're like semi-bearer instruments. You still have the counterparty risk, and that will continue. So we've seen with some of the stable coins recently, you know, they've broken the buck. So was trading as low as 82, 85 cents on the dollar for one of the stable coins. So you could almost make a case there that Bitcoin is the new stable coin.
John, I'm going to leave it.
John's wearing the badge.
Exactly. I've been given the signal. Pete, do I have time for questions from the queues?
One or two, possibly.
One or two questions. So much to cover.
Again, all the panel members will be here for the rest of the day, so if you do have questions, you'll be able to catch up with them at any point.
Yes. Is there a free mic?
Use mine. I can't jump, I'll help myself.
Thank you. Thank you for your panel session. In terms of regulation and governance, do you feel that with what you've seen, with what you've discussed, regulators or governments are going to be more proactive in getting involved in this space, or do you think that they'll develop their own cryptocurrencies or digital currencies and operate as an independent entity?
I mean, I can speak for what I see in Gibraltar at least. I think the answer to that is certainly that the Gibraltar government's been proactive. They're listening to the industry. We've seen that with the creation of the DLT regime. We've seen it also with the supporting the Gibfin, for example, in respect of its changes to the EIF regime, the crypto code of conduct, and the token sale regulations, which are going to follow shortly. On that context, I would pick up on I think what John might have mentioned to do with volatility and bad actors. I don't think you necessarily need bad actors to trigger a change in regulation. I think most regulators have at heart one of their core principles is to try and protect consumers. So if they feel that there's a change in culture and what consumers are looking at, then that will trigger change in regulation without necessarily there having to be a failure to trigger that. So I think regulators and governments will follow shortly.
I think John and James, you've both.
I have no comment on that.
Oh, okay. Great, James.
I'd like to add that our regulator, the Gibraltarian regulators' view on this, which is let's get ahead of it and see how to do it right, is really quite heartening and quite impressive. I think most regulators, and not what you would expect from a regulator, other than in Gibraltar perhaps. Most regulators are going at it from a very defensive position. Oh my goodness, what do we do with this? And so kudos to the Gibraltar regulator.
And that's a perfect segue because we're going to touch on that at length in the next panel. So, gents, thank you very much. Thank you very much for being so.